welcome to BQ Prime. Joining us today is Mr. Gautam Badalia. He's the Chief Strategy Officer at Root Mobile. He's speaking with us after the company's March quarter results, where revenue was up 2.32% sequentially to 1,008 crores, and net profit was up 21.85% to 104.5 crores. For the full year, the revenue was up 78%, while the profit nearly doubled. Mr. Badalia, welcome to BQ Prime. What do you make of these results?
Thank you. Thank you for having me here, and good morning, everyone. First of all, I think we've been very clinical, I think, in terms of the way we have been operating. For the last 8 consecutive quarters, we have been demonstrating better revenue growth and profitability quarter on quarter. And this is at the backdrop of a very strong execution team that we have kind of laid out globally. So that's pursuant to our global playbook approach, where we have multiple levers of growth. And the quarter gone by, I mean, we were able to also reap the benefits of the global CPaaS play that we have. And today, I mean, with the kind of revenue run rate that we are clocking, we are already at a $500 million run rate, on track to achieve $1 billion revenue run rate, I think, in the next 3-4 years. That is what I think we've been kind of guiding from our perspective. So I think structurally, there are a lot of headwinds while globally. Despite that, I think as the world's going more digital, we tend to be a significant beneficiary. And at this point in time, the momentum continues to be intact, and we are already kind of looking at a very strong FY24 as well.
Okay. You mentioned about execution and you mentioned about guidance. So what you're saying is that the services that you provide are not discretionary. This is where we are seeing a pullback from clients. So you're saying the CPaaS services that you provide, the cloud computing service provides, they are not seeing an impact at all due to this macroeconomic headwinds, sir?
So some aspects of the business are definitely witnessing some headwinds. I mean, largely around the promotional spend from enterprises. But having said that, because of COVID, a lot of things have become more structural from a digital ecosystem standpoint. And CPaaS today is becoming increasingly the backbone of the entire enterprise communication ecosystem. And that's where all the critical communication, be it any transaction, notifications, or customer engagement, the world's kind of moving to the CPaaS use cases in a big way. Right from text messaging, voice use cases, WhatsApp or chatbots are increasingly becoming with the generative AI. A lot of things will change in this world, and that's where we as a company will tend to significantly benefit.
Okay, my next question was on AI itself, or generative AI. So what are you doing on the generative AI thing? It's the biggest buzzword right now.
So I mean, we've already kind of announced maybe a few months back that we've already launched a DIY kind of a bot framework where you can kind of do plug and play, drag, drop, create your bot framework. On top of that, we are also kind of integrating a lot of use cases with the chat GPT kind of ecosystem. Having said that, at this point in time, a lot of these things will have to evolve for enterprise use cases. Because today, I mean, you can pretty much do everything on some of these open AI frameworks. So a lot of those use cases will have to be bespoke. So our team is already attuned to it and working towards creating more enterprise use cases.
So you're customizing your offering for your clients.
That's correct. That's correct. So we're making it more and more bespoke for enterprises.
Okay. That is what I understand the opportunities that AI will bring for your business in CPaaS. But what comes to mind right now, for me right now, is AWS in its most recent quarterly earnings said that they are seeing some weakness in the cloud computing space regarding the uptake that they're seeing. So do you see that there will be some lag at your end as well? Because the biggest cloud computing player is saying so, the provider is saying so. So what do you think it will impact you as well? That kind of a narrative?
So that's a very good question. So essentially, if you look at it, definitely there is some amount of recessionary headwinds that there globally, and to some extent, I mean, some of these cloud computing spends have reduced. But having said that, I think just for the sake of reiteration, I mean, we are one of the largest, if not the largest, CPaaS players from emerging markets, and we are not dependent on one geography for our growth. So while we may have some headwinds or in a particular market, but considering the size scale that we perform, we've been able to win a lot of market share from competition. And
Okay.
that has actually led to this kind of growth that we've been able to clock, while most of our competition have been kind of facing some sort of growth challenges, but we have been able to demonstrate industry leading growth because of our multi-pronged, multi-geography approach that we have globally.
So I am guessing that gives you the confidence to guide for a revenue growth of 20% and a margin of 12.5 to 13% in FY24. You also mentioned, okay, building on this guidance that you have for FY24, you're also saying that you'll be a $1 billion enterprise in the next 3-4 years. So can we expect you to deliver this 20% growth for the next 4 years on a CAGR basis?
So the industry is definitely growing at that kind of growth figure, and there is no reason why we should be growing at a growth rate lesser than that. From our perspective, as I said, the industry is also witnessing a lot of consolidation, and the revenues are kind of getting more and more skewed towards large organized players, and we happen to be one of the largest in the space in emerging markets, and that's where we believe will definitely tend to benefit. And the $1 billion revenue run rate revenue target is an aspiration, and considering our historical track record, we believe we are reasonably confident of delivering it over the next 3-4 years time frame.
Okay. You mentioned about consolidation in the space that you operate in. Are any acquisitions that you're eyeing in the near future?
So there are definitely some white spaces, I think, in terms of our product bouquet. So we'll look at least plugging that some of those white spaces either through organic or inorganic efforts. So some bolt-on acquisitions, I mean, is something that we would contemplate. But again, I mean, we're only looking for quality assets. We don't want to kind of just do an acquisition for the heck of it. I mean, we're looking at real value add that we can kind of offer to our customers. Plus, US happens to be kind of a weak link in our portfolio, and at a point in time, considering the technology meltdown that's kind of played out in US, we would be kind of open to kind of look at some inorganic opportunities for an entry into US. So yeah, so some of these would be, I mean, from an inorganic acquisition standpoint, some of these would be the top priorities.
Do you set aside some cash for these kind of deals that you may make in the future? Have you set aside something on those lines?
Yeah, so as we speak, we have close to $100 million of cash. Plus, we have a very robust and a healthy balance sheet. We can also kind of resort to any leverage. At this point in time, the net cash on the books is about 770 odd crores. So per se, I mean, we have the ammunition to pursue some of these acquisitions, so to say.
Okay, let's talk about people then. What are your hiring plans looking like for FY24, given that you're targeting 20% revenue growth? What are the salary hikes that these guys may expect in the coming year?
No, so we definitely try to kind of dole out more than inflationary kind of a salary hikes on an average to employees. Plus, we also have an ESOP policy where we also kind of give employees who are kind of performing really well ownership of the company through the ESOP policy. And we also have some incentive schemes that we have rolled out largely for the new products, because we are at an inflection points from a lot of these new product initiatives. And at this point in time, some of these new products with the adequate trust, we can take it to a different scale. I mean, from where we are operating today. So I mean, there is a very healthy incentive scheme that we roll out for employees, ESOP policies, and the salary hikes happen to be, I mean, northwards of the inflation in each of the geographies.
Would you like to specify how many people you would like to hire this year? And are these guys also being trained on AI? That is the new portion that you are targeting right now.
So what we have actually strategically done over the last 12 months is create dedicated SBUs for each of these products. Prior to that, we were largely geographically aligned. We had leadership across each geographies, and we were tapping into enterprises through the hunter and the farming setup that we had. but at this point in time, we've realized that some of these new products are gaining a lot of steam, and it's actually becoming the order of the day from an enterprise standpoint, where they're looking at rendering better consumer experience. So we've created dedicated SBUs for each of these products. And from a team standpoint, I think the team is very well poised. We have done a decent amount of hiring over the last 12 to 24 months, and the team is kind of very well poised, and they're working as a cohesive unit at this point in time. So except for a few hiring here and there, we're not looking at significantly ramping up the workforce.
Okay. Thank you, Mr. Badalia, for this fantastic conversation. All the best for FY24. All right. Thank you, viewers,
Thank you.
for tuning in. Stay tuned to Beauty Prime for more.